So we're going to do the following. The European Union is going to agree to purchase from the United States $750 billion worth of energy, $750 billion worth of energy. They are going to agree to invest into the United States $600 billion more than they're investing already. So they're investing a large amount of money. You know what that amount of money is. It's very substantial, but they're going to invest an additional $600 billion. They're agreeing to open up their countries to trade at zero tariff. So that's a very big factor. Opening up their countries, all of the countries will be opened up to trade with the United States at zero tariff. And they're agreeing to purchase a vast amount of military equipment. We don't know what that number is, but it's the good news is we make the best military equipment in the world, so sort of you have to do that. I mean, so those things are $750 billion, $600 billion, opening up the country. We are agreeing that the tariff straight across for automobiles and everything else will be a straight across tariff of 15%. So we have a tariff of 15%. We have the opening up of all of the European countries, which I think I could say were essentially closed. I mean, you weren't exactly taking our autos, you weren't exactly taking our agriculture, and then you would have smaller things, but for the most part it was closed. And now it's open. It's open for our companies to go in and do a good job with it. I think you'll like them. I think you'll like it. And we will, very importantly, they'll be investing a lot of money, but the military is a big number, but that's one number we're not determining. It's going to be whatever it is, but they're going to be purchasing hundreds of billions of dollars worth of military equipment. They're very important. They're going to purchase $750 billion worth of energy. So that's going to be great. And $600 billion worth of investments into the United States over and above what they have. So, and I think that basically concludes the deal. I mean, those are the main factors. I don't think there are too many other factors.
So as we can see there from Trump, I let him open up the show because that's the person who we have to thank for this deal. So welcome back to Nights and Weekends with me, Marcus, your host, the one-man band on this side of the internet. So we're going to hop right on in. This is going to be pretty quick. But the EU and the U.S. have agreed to a trade deal. The 30,000 foot view is that the EU is going to open up its markets, at least for some certain items, with 0% tariff on U.S. goods. There's going to be a blanket 15% tariff on all goods coming from the EU to the United States. And the EU is supposed to invest over $1 trillion worth of extra investment into the United States. Now, the thing that I hope they don't just invest it into our stock market. I hope that they actually invest it into goods and services that will increase production here. So we're going to hop right on in. This right here is from the BBC because I didn't want to go to CNN or whatever, but this is going to be quick. After a make or break negotiations between President Donald Trump and EU Commission President Ursula von der Leyen in Scotland, the pair agreed to a blanket U.S. tariff on all EU goods of 15%. It was supposed to be 30%. That is half of the 30% import tax that Trump had threatened to implement starting on Friday. Trump said the 27-member bloc would open its markets to U.S. exporters with 0% tariff on certain goods. Now we're going to skip over to this. This is in the same same article, but there's only so many times I can highlight stuff. Von der Leyen also hailed it as a huge deal after tough negotiations. Now, let me just throw this in. We could not even remotely ponder or even fathom that the old administration would have done any of this. But anyway, under the agreement, Trump said the EU would boost its investments in the U.S. by $600 billion, purchase hundreds of billions of dollars of American military equipment, and spend $750 billion on energy. That investment in American liquefied natural gas, oil, and nuclear fuels would, von der Leyen said, help reduce Europeans' reliance on Russian power sources, which is good because why keep fueling your enemies, right? Like, again, I wonder if the people here back in the 70s when Nixon opened up China to U.S. investment, I wonder could somebody from the future have went back in time and said that you're going to empower our political enemies. Anyway, I want to thank President Trump personally for his personal commitment and his leadership to achieve this breakthrough, she said. He's a tough negotiator, but he's also a deal maker. The U.S. president also said a 50% tariff he had implemented on steel and aluminum globally would stay in place. So let's go here to me really quick. So that's the 30,000 foot view. Probably over the next few weeks, we're going to get a chance to see what's really in it. But from my point of view, here in the Nights and Weekends studio in my basement, if President Trump can get foreign investment, not just solely into our stock market, but into actual factories, production, mining, this will reduce our trade deficit, and this will make the U.S. more productive overall. Now, for anybody out there who will complain about, oh, well, Trump looks at this completely wrong, having a trade deficit isn't an issue. Future Markets is going to find a thing saying that essentially when it comes to having huge trade, no, matter of fact, cut in that video that you had from Warren Buffett.
Economics tends to put people to sleep, and I thought maybe by creating a couple of islands with inhabitants of quite widely different activities that it might get across a point that otherwise they get lost on. The thrust is that if you own a lot of property, an island in this case, you can trade it off for the things that you eat and consume every day. You can do that for a long time, but eventually you run out of property and then you have to work a whole lot harder to provide your own needs, but also to pay back for the debts you've incurred.
The problem is not having a small deficit or a small trade deficit. It is repeated large trade deficits where they come in and they have claims on your land. Okay? That is the problem, and that is what we did as a country for too damn long. But I had wanted to throw this in on the back end when it comes to the tariffs that Trump has put in, because if you listen to the media, depending upon where you get your media from, they will blame all the increases in prices on tariffs, right? And they will also never fully explain to you the breakdown of that. So we got this here. This is from JP Morgan. Okay. They absolutely went on ahead and looked on into this. Now, again, JP Morgan, these are folks that move around more wealth than the Nights and Weekends guy could create it in a trillion years of living. So U.S. consumers, businesses, and foreign exporters are all chipping in on tariff costs. We estimate U.S. consumers are paying about a third of the tariffs so far, with foreign exporters and U.S. businesses sharing the other 66% based on our look at goods prices and revenue collection through June. All that to say, the consumer burden is low, especially compared to the 2018 and 2019 tariffs, when U.S. consumers bore 80 to 90% of the tariffs. So with that being said, there's something called margin compression. So instead of them making $500 off of a product, they're only going to make $400 or $300. So it's their margins are getting squeezed. And the consumer, for the most part, is not bearing the load of the tariffs. So the next time you see a David Pakman or the assholes on CNN or MSNBC saying, this is driving up prices, tell them to shut the fuck up, because they are not telling you the full story. Again, they always have some type of goddamn narrative. But I wanted to look at this really quick. In 2024, this is from the BLS, Bureau of Labor Statistics. I can't even highlight it here. Let's just zoom in. All items, the unadjusted 12-month ending December 24, okay? Inflation was running at 2.9%. And that wasn't with any of these Liberation Day tariffs and everything else. Now, I have to say this. Again, your media, such as CNN, MSNBC, blah, 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 they all lie to you by omission because they think that you're stupid. They will not point to this chart from starting in 2021. Annualized inflation went from 4.9%, 8.58%, 9%, etc. But they will just say, oh, that's just because of the lockdown. No, that's because of the Federal Reserve and the government pumping so much goddamn money into the system. And also with the stupid ass lockdowns that reduce supply. So I'm not going to beat that horse. That horse is dead somewhere, sitting somewhere dead. But from the second half of last year, this is from Y Charts. They get their information straight from the BLS, by the way. June 24, annualized inflation rate was 2.97%, 2.89, 2.53, 2.44, 2.6, 2.7, 2.89, and then in January of 2025, now, President Trump didn't have much of a goddamn effect on that because he was only president for like 11 days. It was 3%, okay, annualized. And then we have it here, 2.82, 2.39, 2.31, 2.35, 2.67 was the last reading for June. And so far if you do unadjusted 12 month ending June of 2025, the annualized inflation rate is 2.7%. So at the end of the day, the tariffs are not really raising the price of our goods. It just isn't. The producers, the exporters, the other countries, etc., they are paying the majority of the tariffs, and their margins are being eaten away at. So there we go. We're going to put this back on me. I hope at the end of the day, this brings in more investment here, not just in our stock market, but in actual production. 2, the tariffs are doing what they are supposed to do, which is to bring in investment here. So we produce stuff here. Okay. And for the most part, the consumers are only getting maybe a third of the actual tariff rate that we are paying when we actually buy the product. Now, I do have to say this. The main reason why that's going on, and I have to bring this up because I say we've been in recession for a while here. The reason why the producers and the businesses can't raise their prices is that the U.S. consumer is at the end of its road. Okay? Things have not been right for a while here. there are still brand new cars sitting on the lot that are 2023s that I had never heard of in my entire life. So no, I hope that Trump is able to get Jerome Powell to lower the rates substantially, and maybe we can avert a full-on recession. But hey, see ya in a week. Thank God that Trump got that deal done, and see you in a week. All right, bye.